Hi everyone, let's talk about Affirm Holdings. It's a company that operates as a platform for digital and mobile first commerce in the United States and Canada. They have approximately 6,500 merchants integrated in the platform, covering small business, large enterprises, direct to consumer brands, brick and mortar stores, and other companies. Company founded in 2012 and it's headquartered in San Francisco, California. Market cap is already quite big, but somehow the snowflake analysis shows on the red side future growth 2 out of 6, financial health 2 out of 6. Revenue is forecasted to grow over 20% per year. Revenue grew already almost 70% over the past year. It has highly volatile share price, this on the risk side. We've seen that the peak was on the February. They went IPO, by the way, in January 13th. And yeah, since that they did went up within a month. But they did a big drop. So I guess there was pretty strong support at around $50 per share. Currently they are $124, and as you can see, those who invested in the peak were at the bottom 65% on the negative side, and those who invested there, they are 157% up. So that's the volatility on the market. Company is currently unprofitable and not forecasted to become profitable in the next 3 years. Latest share price and events, client updates, mostly entered index, board change, and this is all time. If we look at the max, all time 6%. That is, we see only 90 days on the max frame, 35%, which beats the industry and also the market. Valuation side, TipRanks has the $111 per share. That is meaning 10% downside. Analyst rating consensus says that there's a moderate buy, 6 on the buyer side, 4 holding, 1 selling. And MarketWatch has better price targets. I guess, it's same as they had in TipRank's 12-month forecast. In good scenarios, 150. In bad scenarios, $65 per share. So there's the tunnel. Average $111 per share. And based on simple Wall Street, fair valuation should be around $18. So that's pretty odd and very volatile on the forecast side. Future growth for the company is forecasted 31% in annual earning growth, and also earnings per share is forecasted as well as to grow till the within 3-year frame. They would be pretty close to the profitable side, but never knows. Past performance, last year's earning growth decreased by almost 90%. That is meaning from the latest the earning update, earnings were minus 134 million, and currently it's minus 242 million. That is based on last earning update, minus 31% of profit margin. That's pretty low. And financial health side, we see that the depth level is increasing, same as the equity and also the cash. I guess they printed some shares out. They doubled their shares out. Of course, that is good for the company because they have the cash to invest the money for the business. Debt 2 billion, equity 2.4. billion, cash 1.6 billion. Debt to equity ratio is almost 85%. Balance sheet looks pretty normal. So there's a liability side. This one almost half of the depth. Then up in dividends, and on the insider transactions, there's on both sides individuals, also the companies have been, they sold at $95 per share, then they put the buy on the 49 per share. So that's the way how companies are making money, selling about $100 and buying $50, 3 million. And ownership breakdown: institutions holding 41, general public 20. That's pretty new name on the list. Sovereign wealth funds $8, private companies $8%, public companies 7.7, insiders 7.3, VCP Affirm 7.1. Top shareholders: JP Morgan Asset Management increased by 156%. Vanguard is here 88%. I didn't find out, actually it's here. BlackRock 15%. That is all reported in end of the June. Yeah, but there's on both sides actually, not as significant. So this one, Khosla Ventures decreased almost 10%. They are holding 1.2 billion. There's a Max founder holding 6.36%. Max Levchin 1.6 billion. And shares outstanding doubles, sales doubles as well. That is pretty good news. And I guess this is not so bad as I thought. Investing.com summary of the stock for long-term investors is a strong buy. Moving average buy. Technical indicators strong buy. And do they have the comments? This is going to knew all the highs before earnings report on September 9th. Affirm shares soars more than 40% on the news on Amazon partnership for buy now, pay later. Like always, manipulation on hand. What happened? There's a lot of question why it soars. So this one, why it went, but this is pretty normal volatility on the market. When the stock is going out, those who invested earlier cannot sell within some of the time frame, so they need to wait. I'm not sure, is it 100 day or 180 days? Those who knows the rules, can you please put on the comments? So those who invested before the IPO, do they need to wait? So I guess there's no even possible so that they could sell on the prices that are once they get higher, so they cannot sell. They need to wait some of the, maybe half of the year, I guess. But those who knows, you could comment this time frame. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.